Daily Fiscal Pulse for the 27th of April, 2026. We're working with Monday's settled data today, so nothing here is real-time or preliminary. Let's start with the lay of the land. The AI and tech story continues to dominate. You're seeing it in the headlines. Traders positioning for Nvidia to climb back to record levels, and that momentum is clearly flowing through the markets. But headlines move fast. The real question is what the actual money flows are telling us underneath. The data's pretty straightforward. More cash flowed out than came in today. The net fiscal transfer hit negative $28.3 billion, with tax receipts the main culprit at $41.8 billion. That's money getting pulled straight out of circulation. The S&P futures paint a different picture though. ES closed at 7,207, still holding above the 20-day moving average of 6,912. Over a 20-day span, you're looking at roughly 852 points of range. So prices are staying resilient even with this fiscal drag on top. Pull back and the pattern gets sharper. Daily government spending is averaging $5.3 billion right now on a 5-day basis. That's substantially lighter than the 20-day average sitting around $13.2 billion. Less cash flowing into households means less trickling through to the markets. The year-over-year picture confirms it. We're at $696.3 billion spent so far in the fiscal year, roughly 17% behind where we were at this point last year. That's a material pullback in fiscal support, and liquidity conditions definitely feel it. From a trading standpoint, fiscal conditions aren't giving you a clear signal in either direction right now. The conditions gauge is at negative 15. But here's the thing. We've been in similar positions plenty of times. And historically, even with tighter liquidity, the S&P has still managed to average around positive 1.2% over the next month. Liquidity and market returns don't move lockstep. So here's the tension. Fiscal flows are running below last year, which means there's less cushion built into the system. When the news cooperates, equities can grind higher anyway. But when something goes wrong, if there's an escalation in the AI space or broader tech issues, markets can fall harder simply because there's less liquidity underneath catching the bid. One more thing. We've had 3 straight days of declining fiscal transfers. That kind of streak usually shows up in price action pretty quickly. There's a calendar to watch here. Month-end settlement on the 30th of April could shift near-term flows around. And then there's the 15th of April individual income tax deadline, which is the single biggest reserve drain all year. Fiscal conditions are clearly restrictive. What matters now is how restrictive. Keep an eye on those scheduled flows because they'll tell us what comes next. That's our focus today.